प्रेजेंटेड बाय ईबिक्स कैश। हर खुशी के लिए काफी है।
Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the headlines tonight. Lackluster trade on D Street. Sensex ends lower. Nifty managing to hold on to 18,000. Metal, realty, banks under pressure. Blockbuster listing for Nykaa. Investors book 82% profits on listing. Company founder Falguni Nair tells Business Today TV that physical stores are a big priority going forward. Retail and institutional investors rescue the Paytm IPO on its last day. Corporates and HNIs stay away even as the mega issue is subscribed several times. Maruti cites increasing production costs, hints at a fourth price hike this year, says it's been able to increase production in November after record lows last month. And in the latest crackdown, China puts a stop to social media influencers giving online advice, says they will need a broker's license to continue. Markets rebounded in the last hour of trade after a gap-down opening. Sensex recovering 400 points from its lows to close above 60,000, down about 81 points. The Nifty finally managing to settle above 18,000, down just about 31 odd points. Buying in select heavyweights, UPL, Bharti, M&M, Britannia, Reliance, that's really what lifted the index higher. Metal stocks like Hindalco, Tata Steel, JSW Steel, that's really where we saw the drag in today's session. Realty and banks also under pressure. Broader markets remain volatile, mid-caps closing down about 0.5%. Small-cap index closed on a flat note today. India's first women-led unicorn, Nykaa, made a blockbuster debut on Dalal Street today, up over 90% on the first day of trade. Nykaa's market cap hit the 1 lakh crore rupee mark, making its founder and CEO Falguni Nair India's wealthiest self-made female billionaire. Take a look at her journey.
For the customary countdown, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Woo!
She's the new billionaire queen of India. E-commerce giant Nykaa saw a bumper opening on Dalal Street today, and within 5 minutes, founder and CEO Falguni Nair has emerged as India's richest self-made woman billionaire. 58-year-old Falguni, who was born and brought up in Mumbai, is now among one of the world's wealthiest and has joined only 6 other women billionaires in India.
What a journey Nykaa has been. Going right back to 2012, I was in an established career which would often see me help entrepreneurs be in the exact position I am in today. After taking a giant leap of faith, I left my long career in investment banking to build a platform which at the time saw few believers and many naysayers. A beauty destination for all, powered by technology, content, community, and just pure passion.
The story of this unicorn started about a decade ago. Falguni Nair left her 18-year-long job as an investment banker at Kotak Mahindra Bank in 2012. Her dream was to be an entrepreneur. This dream led to the creation of a beauty and wellness website, Nykaa. Back then, the focus of Nykaa was to provide beauty products to women and men in India online because Indians mostly relied on smaller neighborhood stores to buy beauty products. With the launch of Nykaa, cosmetics and skincare products were just a phone tap away, and the range of options increased drastically with the introduction of international brands. And after 10 years, Nykaa has grown into the country's leading beauty e-tailer. If we talk about investors, Bollywood actor Katrina Kaif and Alia Bhatt invested an undisclosed amount in the platform through a secondary transaction last year. Apart from heading Nykaa, Falguni Nair, who is an IIM Ahmedabad alumna, is currently on board of Aviva Insurance, Dabur India, and is also an independent director on the Tata Motors board. Nykaa's market capitalization, meanwhile, has already matched industry giants such as Britannia, Godrej and Indigo, and with its listing, Nykaa's valuation has reached nearly $13 billion. A dream fulfilled by Falguni Nair in just 9 years. A huge inspiration for every hopeful businessman and entrepreneur out there. Bureau Report, Business Today Television.
You're with us here on Business Today for an extremely special interview with two ladies who are at the forefront of making history when it comes to the Indian stock markets. Nykaa had a blockbuster debut today with its market cap crossing 1 lakh crore rupees, the stock listing at a premium of 82% as compared to the issue price of 1,125 rupees. With this, Nykaa's founder, Falguni Nair, has become India's wealthiest self-made female billionaire, and it gives me great pleasure to welcome both Falguni as well as Advaita Nair, the Executive Director, FSN E-Commerce, with us here on this exclusive conversation. Thank you so much for being with us, Falguni. Huge congratulations, and I guess the big question now is, how do you see this blockbuster listing really taking the brand discovery even further and helping proliferation for Nykaa?
I think I've always said that Nykaa enjoys much consumer love. We've had more than close to 40 million visitors visit all our platforms over, if you look at the last month's data, and more than 10 million customers have been the buyers on Nykaa apps and websites. So I think the similar journey has now begun on the investor side with retail participation at 10x. We had more than 2-3 million retailers who had shown interest to participate in the Nykaa journey besides the institutional investor. And while we have not been able to fulfill all the investor needs, and maybe only 1 in 10 investors has got the allocation, but that also has given us almost 4 lakh investors that come into the Nykaa family.
Yeah.
And I hope this journey of investor love continues just the similar way as what we've faced with the consumer love. And the advantage we have is that our investors, our consumers, and everybody around us is all in one. Our investors are also our consumers, and our consumers are also our investors. So that's a fantastic place to be in.
Absolutely. Advaita, why don't you come in as well, being part of this journey? And, you've always been so passionate about what you're building at Nykaa, and also, of course, the fact that fashion vertical has also grown leaps and bounds and has become one of the mainstays. What's the kind of vision you have? How much bigger do you feel this will be in terms of Nykaa's growth trajectory going forward?
Yeah, absolutely. You're right. I think, we've really enjoyed every single minute of this journey. We were reminiscing earlier today during the ceremony that when we think back really 8 to 9 years ago, when we were struggling to even get 20 orders a day to implement an ERP, one could not have imagined the moments that we'd be facing today, which is a historic IPO. So one can't help but reminisce on both the highs and lows that we've experienced over the last 9 years. I think for us, this is just a stop along the way. There's a lot more to do. There's a lot to look ahead. For me personally, focusing on the fashion business is incredibly exciting. I think it's a bold bet we took about 2.5 years ago. It's already showing incredible momentum, but I'm very convinced that this is going to be a very, very sizable business in a very large market. And we can see that, in the next couple of years, the bold bet to enter fashion, though it was a competitive space, will really pay off. So overall, feeling extremely bullish on fashion. And I think, moving from being just a pure beauty retailer to being beauty plus fashion was the right move we took a couple of years ago.
Falguni, now part of the proceeds, 630 odd crores, will be utilized for the retail store capex as well. How many store additions are you looking at? What's the plan for the remaining fiscal? Are there any targets on the outset?
Yes, I think it's difficult to make too many forward-looking statements at the moment, but I think we do have a big plans to continue our store rollout. I think it was held up last year due to COVID realities, and I think we are pushing the pedal on store rollout, and we are already in more than 40 cities with more than 80 stores, and I think the same momentum on store addition will continue. I think every couple of months you'll see that we're adding 3-4 stores, and I think on an annual basis I do believe that we'll add at least 40-50 stores.
All right. Nykaa is one of the few startup ventures in the online retailing space which has achieved strong growth and is profitable. What are some of the strategies that you plan to continue working on to maintain this kind of growth momentum and in fact even ramp up profitably faster? In many previous conversations, for instance, Falcone, you've talked about that. You've talked about the possibility to actually improve the pace even further. Share with us anything you can when it comes to strategy now going forward.
I think the main thing is e-commerce. It's early days of e-commerce penetration in beauty and fashion is still low.
Okay.
Beauty at 8% and fashion at 12%. And with this early days, I think the consumer adoption of e-commerce is growing. And Nykaa will also continue to acquire new customers. And short-term profitability is always a balance between new customer acquisition and returning customer behavior.
Right.
And I think Nykaa is very focused on our CRM strategies to make sure that our existing customers also keep coming back. And I think we will pursue balanced growth in terms of, be patient to build our company for the long run strength and try to maintain a pace of growth that is affordable and sustainable. Advaita, do you want to come in here?
Yeah, I think honestly, this dynamic between growth and profitability is something that's deeply in the DNA of the company. I think all our leaders are constantly, weighing the dynamic, and we really do think that we can do both. We can strive for strong growth without compromising on profitability. All our business plans, models, projections before we enter into new business even are all built keeping that in mind, that we have to deliver very strong growth, which anyway, being part of a large market as beauty and fashion allows us to do, but at the same time do it sensibly and do it in a profitable manner.
And so how much of the total expenditure currently would be going into tech and inventory management?
I think it's difficult to quantify that way, but a large part of our employee costs is tech related, and of course then there are other tech expenses which are like the technology platform costs, and on the inventory I think it's not really a cost. We of course buy the inventory and sell it, and we are inventory led, but cost of funding inventory is a very small percentage of our costs. But we do believe in beauty being an inventory-led business, and as far as fashion goes, it's more of a marketplace business.
Okay, so Advaita, of the two verticals, BPC and fashion in the online space, talk to us as well, of the kind of vision going forward. As you said, fashion is going to be growing fast, but when it comes to BPC as well, in terms of onboarding new brands, what's the next step in terms of that journey as well?
I think both businesses have a very exciting prospects ahead. I think on the fashion side, we've onboarded 1,500 brands just in the last year.
Okay.
I think there's a lot of brand onboarding to be done. I think there's a lot of focus on creating a very differentiated platform. For the watchers out there with Nykaa Fashion, we're really trying not to be like anything that currently exists in the market. So trying to do something more premium, more curated. So there's a lot to deliver on the vision through content and user experience. There's still a lot to deliver on the user side and the experience in terms of delivery technology. So we have our hands full on the fashion business to really scale it up over the next year or two. You'll also see us, going international to bring international brands into the country the same way we did for the beauty side of the business.
Now, the much anticipated Paytm IPO has managed to scrape through on the last day of its offer. The IPO has been subscribed 1.89 times thanks to the last day push by FIIs. Domestic institutional investors and mutual funds, which also comprise the QIB portion, have virtually ignored the IPO. The other investors category, which consists of corporates and HNIs, is subscribed just 24%. Retail investors have shown some enthusiasm for the fintech IPO, with subscription at 166%. The company is raising 18,300 crore rupees, of which just 8,300 crore rupees will go to the company. The balance 10,000 crores will be given to existing investors, which are cashing out. Maruti could raise the prices of its cars again for the fourth time this year. Speaking at the launch of the all-new Celerio hatchback, the company's MD and CEO Kenichi Ayukawa told Business Today TV's Chetan Bhutani that the rising costs of raw materials and fuel prices have left the company with no choice but to pass on some of the burden to the customer. Maruti also made it clear that a solution to the semiconductor shortage was not on the horizon and production restrictions would continue for now. Listen in.
Demand of a customer response is very, very strong. Fortunately, unfortunately, we have a lot of back order. And unfortunately, also according to chip shortage, we have our production is limited. In case of October, we are only producing about 60%, 70% production. Improving in November, a little bit improving. Next month, maybe is furthermore improving. But it is very difficult to recover the 100% because in case of our shortage, due to that some chip maker located in some country, the country facing the pandemic. That's why they have to shut down. But the situation is improving. But globally, that chip shortage, similar to all industry, capacity itself the shortage. That's why we have to study consider how we're going to encourage the chip maker volume expanding. Those kinds of stage we start communication with our business partners.
Coming with 6 airbags, the vehicles would get more expensive, and by how much if the notification comes, if the rule comes?
It's a very, very difficult situation because once again, the pushing at the cost. And right now, as you know, the all material costs are going up, car price is going up. We cannot absorb it, by our effort. Under that condition, that price going up and also fuel price go at a very high level. Unfortunately, that situation is discouraging customer demand. That is a big concern for us.
Correct. Absolutely. In the recent times to come, do we expect any further price hike from Maruti? Is there anything on the cards right now?
Situation itself, comparing it 2 months ago, the car now they're not so much different. We try to absorb, but some level that price up it cannot absorb with our effort. We have to ask the customer sharing some cost.
In a major reform move, the central government has changed the way it chooses bidders for its infrastructure projects. The lowest price bidder will no longer be the default winner. The move is expected to ensure quality work and keep a check on delays in infrastructure projects.
In what is being hailed as a major reform, the Modi government has done away with lowest cost being the only criteria to select contractors for government projects. Popularly known as L1, the method was considered a bane for infrastructure projects. Industry and infrastructure experts have hailed the government move, which will focus on quality now. Under the revised guidelines, government has allowed selection of bidders through procurement methods like quality-cum-cost-based selection. The move looks to put a stop at entities delivering substandard product or service. Long delays, cancellations and cost overruns will now be things of the past.
In many senses, it was a broken system. And Indian industry, chambers of commerce, well-wishers have been advising various governments, as I said, for 40 years now, to say that can we have a system that gives a certain recognition and weightage to the quality of the firm that's bidding.
So what exactly is the L1 method, which has been under fire for a long period of time? According to the method, the bidder is selected on the basis of the lowest cost committed to finish the work. Weightage is not given to technical score. Unlike L1, quality-cum-cost-based selection gives higher weightage to the technical credentials of a bidder. According to the new rules, the weightage of non-financial parameters must be less than 30%. The method evaluates a bidder based on a combination of technical and quality scores. Experience, manufacturing capability, availability of state-of-the-art machinery, domain expertise of the bidder will be taken into account.
government has only taken a first small step by allowing only 30% technical score and 70% financial score. So it is allowed all public works which are defined as projects of quality. A competent authority has to define a project as a project that demands quality execution. And when a competent authority defines it, then the bidding can be on QCBS.
While L1 bidding norms have impacted infra projects, experts also advise caution on the use of quality cum cost-based selection. According to some, the method can lead to cartels among suppliers. The reform can be successful if implemented properly with clear norms in place. Bureau Report, Business Today Television.
After Elon Musk, cryptocurrency has found a new backer in the US entrepreneurial system. Apple CEO Tim Cook recently revealed he's personally invested in cryptocurrency. He thinks it's reasonable to own it as part of a diversified portfolio. The CEO of the $2 trillion megalith also talked about NFTs, non-fungible tokens, and said he finds those interesting. In a development that may be followed closely in India as well, China has banned social media influencers from pitching stocks and stock brokerages in its latest crackdown. The Chinese regulator, China Securities Regulatory Commission, has made it clear that only those with a brokerage license can peddle financial advice.
An example of what has attracted the ire of the Chinese stock market regulator is this thread on Weibo, titled Evergrande Settles with Guangfa Bank, which pushed a false message that Evergrande has fully settled on a repayment schedule with all banks to which it owes billions of dollars. The topic spawned hundreds of discussion threads, with people reassuring each other. Remember, this China-based construction juggernaut shook the foundations of world stock markets for a while in September. Evergrande owes banks and its creditors a whopping $305 billion. Protests by homeowners and creditors were widespread. However, it was the much muted response online which surprised many. This was thanks to an army of influencers who were being paid to put out calming but often false information on the debt debacle. Messages like these are being planted every day on Weibo, the massively popular Chinese equivalent of Twitter. Influencers with hundreds of thousands of followers have been approached by Chinese brokerage and companies to attract customers by selling an often false narrative. The trend picked pace during the COVID-induced lockdown. China has now put a complete stop to this. Regulators have banned brokerages from hiring social media influencers to attract new customers, saying they would no longer be allowed to acquire customers by working with big influencers who are not licensed brokers. Investment recommendations via live streaming are also banned. Also banned in the latest crackdown, attracting attention by using sensational wording or quirky outfits. With China fully opening its $54 trillion financial industry to global giants, the nation's more than 130 brokerages have been under mounting pressure to maintain market share and win new businesses. Influencers were an easy way out until now. The question now is, how soon will the Indian stock market regulator look at the role of influencers in the country? Bureau Report, Business Today Television.
The Reserve Bank of India has again raised serious concerns about the increasing investments in cryptocurrencies. The central bank and the banking sector regulator said that it has flagged these concerns with the government. The RBI governor also raised doubts over the claimed number of investors in cryptocurrencies and said that as many as 70% of these investors had just 1,000 to 3,000 rupees invested in cryptocurrencies. That's where we leave it on the show tonight. Thanks so much for watching.